Ladies and gentlemen, welcome back to Perception Paradox. This is Juvila, your host, and today my guest is Peter Sandberg from the Nordic Secondary Fund, which is based in Copenhagen. They do invest into post-Series A scale-ups, a focus on the Nordics and Baltics for now. And Peter himself is a very experienced angel investor. I think he invested into almost 35 companies. They also had some great successful exits, both as an angel and with a Nordic Secondary Fund. And today we touch base on, I would say, 3 key areas when it comes to startups. So the first one, we dig more into the networking part and the essence of it, because I think Peter is one of the best ones in the market. Then we got into the investment landscape, a bit more about the secondaries, what are the benefits for the founders and investors. And overall, what keeps him thriving in this fast-paced environment. So tune in and enjoy. Real people, real stories, and real challenges that break the status quo. I'm your host, Juvila, and welcome to Perception Paradox. Ladies and gentlemen, today I have with me Peter Sandberg, and he's a person who built an impressive career from your early days in asset management to founding Nordic Secondary Fund, one of the leading players in the Nordic secondary market and also the Baltic. And I think I checked your LinkedIn today, your track record speaks for itself. Successful exits, strong portfolio of angel investments, and I would say from how much I know you, a really deep understanding of the Nordic startup ecosystem. So it's my big honor to welcome you to Perception Paradox. Peter, welcome.
Thanks a lot for such a warm and friendly welcome. I can only try to do my best to live up to the expectations, but I'll do my best, I promise.
I'm pretty sure you're going to do great. So how did your 2025 start so far?
Well, it has begun very fine, thank you. We are almost fully invested in our fund, and I'm planning a number of visits to both some of our portfolio companies and some of the first events taking place from February. As you know, January is kind of slow, which is fine after a busy Q4. So we are planning for those things to happen, and hopefully we will also soon be announcing the beginning of our fundraising for our fund number 3. So there are plenty on the plate, but I'm always happy when there's an opportunity to speak with a great podcast host like yourself about the advantages of networking and, of course, also increasing the awareness about secondaries and the opportunities that can give for hard and smart working founders, basically.
I'm really glad to have you here. So for the ones who don't know and who are not that actively involved in the startup scene or just getting started, well, you go to any conference and you would always meet Peter or someone else from his team, and he would always greet you with a smile, positive energy. And I don't know, in every conversation you feel welcome if it's a circle you join and you feel heard. So Peter, where did you learn your art of listening and art of communication? It's a tough game.
I would say that practice helps a lot. And also experience is also one of the few advantages of getting more than 6 years old. But I would say that you gain a lot from sharing and also understanding that the more you give to a conversation or a potential people you meet, the more you harvest, maybe not immediately, but down the line. So it's simply both good karma and it's also very good for your business. If you are friendly and open-minded, in my former career as a banker, investment manager, and stockbroker, people were very reluctant to share. Everybody was, looking what's in it for me like. And I feel it's much more cool and much more giving for me as a person to work in an environment where people actually are not afraid of sharing, because it makes people are making each other playing a better role. And I think everybody benefits, and not that I'm naive, and I think people are making the big mistake that I think because you are being kind, that you either are naive or not smart enough. But I think it's the other way around. If you show people that you have an open mind and you are positive, it is easier for them to share their ideas, and also they don't have to be afraid that you will sort of hit them on the ideas or try to pinpoint any weakness that might be. But meeting them with kindness and professional is simply good business. And it's also, as I said, it's good karma. And you learn over the years that there are so much to gain by upfront being friendly. Of course, if people don't return the favor and the positive atmosphere, you can either give them a smile or ask them to go up where the sun don't shine, whatever. But basically, the short answer is that you gain a lot by being well prepared, being positive, and of course also by only engage with people you really by whom you think there's also interest the other way around in getting to know. And also, therefore, I usually start by, when I meet people, saying, okay, how can I help you? Because showing an openness in order to say, okay, how can I help you? It's very difficult for the same people not to ask the same question, maybe not when you meet them, but at a later stage, if you have a situation where you could need their help. I don't think I can recall any situations where somebody turned down a polite request for help or an advice because they were left with hopefully a positive impression of me as a person, or the energy. And it also goes when, for instance, we are talking to, it could be companies where we are giving opportunities to buy. And even if we decide not to do a deal, I would like to leave an impression, and people say, okay, we talked to Peter and Frank and the other guys, but we didn't make a deal, but they gave this credit. We had a good process, and because I think it doesn't cost me anything to treat people well. On the other way around, that I would like also to get the same treatment I try to serve. And I made tons of mistakes. I'm not an expert to that extent, but it's just a learning, and I think it's a good advice. And you're also an expert yourself. You're always also positive and smart. And of course, there are also rainy days, but I try to keep them for myself. But of course, I can also have a day where I tend to not to have too many calls because I maybe a lack of energy. But usually, the more energy you bring, the more you get back, basically.
100%. I think it's all very, I wouldn't say transactional, but it is sharing, exchanging the energies. Was it always that way? You've spent so many years in the banking industry, and I do recall I've been collaborating on some partnerships with the banking environment, and some of them can be really tough, not necessarily on a friendly approach. How did you approach your time there?
No, I would also say that having the approach, I'm having in this also as an angel investor was not doable in the 80s and the 90s and the early zeros, because it was at that time it was more like seen as a weakness, not being tough, not being to the point. I can also, like when I'm coaching startups or being asked to evaluate, I can be I think our mutual friend Christopher from Startup Wise Guy, you say Peter is strict but fair. If I'm asked to be critical in a constructive way, I try to be so. Because as well as it's easy to be polite, it's also important to be honest to a startup. But as long as you present your criticism or your ideas in a constructive way, so they can hopefully learn, or they can challenge you, say, we listen, we hear what you say, but we disagree, because that's fine. But the other way around, I would say that is also why, I will never go back to working corporate or large banking. I think this is much more giving. It's going to the conferences where we meet, whether it's in Denmark, in Portugal, in the Baltics, in Finland. There are so many smart and hardworking people working in this line of business, which is probably also why people get addicted. When first you're in it, it's difficult to leave this, whether you are a moderator like yourself, you're a startup, you're an investor. You get very happy of being a part of this environment, and you feel people are in general super good at sharing. But what I fail to understand is that sometimes when you meet people, they say, "Oh, I'll get back to you." That is what some of the phrases I hate. I said, "Okay, if we do it, either we agree that let's talk in 2 weeks or in a month or two. All those, let's stay in contact. That never happens, basically. If you want to have a good network, you need to be able to have some kind of regular contact, or either you post, you would say something about your activities, because you cannot expect that if I have not seen you for a year, I cannot expect you to have an interest in talking to me if I haven't given any comments if you're doing anything, or I don't show an interest around the activities. If you have, because we all get tired of people who only contact you when they want a favor from you. They never ask, let me know, I can help you the other way around. It's like a relationship, whether it's professional or personal. If the one part is basically servicing the other all the time, it doesn't work. And I can say that because today I'm actually celebrating my 30 years of marriage with my wife.
Congratulations.
I've been very lucky. She's been that patient with me for so many years. But we agreed this morning we'll take another 30. So that should more or less cover, hopefully, for this life. What will happen in the next life, I don't know. We will see. So basically, it is like relation. Whether you have some friends or whatever it is, the better you take care of them, the better, of course, they will be there for you. And I think therefore I would rather have fewer, closer ones, and of course having a often connection and 32,000 followers. I don't know all of them as well as I think I know you, for example. But of course, it means a lot if you want to have a dialogue with people that they also know that. It's not just in order to waste your time, but basically because I think it's cool what you're doing, and if I can help, I want to. Otherwise, I would never say today that please let me know if I didn't mean it. Why?
Yeah. Fair enough. And we've been talking with you a lot about this preparation before the conferences, how long it takes, how do you approach it. So for someone who is listening right now and maybe will be going to the first events, or kind of a founder who's been to many events but never experience the return and thinks maybe I should skip going to the events. What is your preparation? What do you do before the event? What's your ABC manual?
That's a super, super good question. And also, I think why some of the tech event organizers are a bit tired when I say to them, it's far too late only opening your platform for matchmaking like 2 weeks before. You should do like slots minimum 4, 6, 8 weeks before. Open up, because it takes a lot of time. Some tools like Brilla and others, they have sort of tools where you can navigate, because going like 2 or 3 days before, entering a page where maybe 2,000 or 3,000 people's profile, it's like looking for a needle in a haystack, both for founders finding the right angel investor and or early stage venture funds. And the same goes for a fund like me. You cannot count on luck. You need to be prepared. You need some data. And there, when it comes to that, Slush is second to none, because they have like an investor tool where all the startups who want to go there, they need to put in a ton of data from everything from their pitch deck. When did they have the last round? What are they doing? So as an investor, you can basically navigate, and you can search, and you can find whether you're looking for 5, 10 or 50 companies. It's possible. And so therefore, I'm a huge fan of having access to the data, preferably minimum 4 weeks before, because I spend hundreds of hours before each conference to go through this. And that is what I'm teaching, basically, the youngsters in our team, like Carl and Mads, who will be joining you at Tech, to navigate, because I made the big rookie mistake in 2016 or 17 at my first loss. I went there without a single meeting booked. I was just, I'll go with the flow. I'll see. I'm very good at talking with people. When I came there, I found out that everybody was busy. Everybody was booked, and there were like 300 tables booked from 8:30 to 5. So I was walking around like a zombie. I said, okay, next year, of course, there were a lot of impression, but I didn't benefit anything really. So since then, I've been booked everything from when I was, the most efficient years. I had like 17 meetings back to back from 8 to 5:30 both days. High quality meetings, all set up in at least a couple of weeks before. Super, super high quality. This year, I only took like 10 meetings a day, and then I had some times to speak like with either a media or podcast hosts like yourself, or I spoke to a VC funds like Marquee or Inventure from Finland or Open Ocean, whatever. But so there was a bit more space because obviously when you are, if you sit at the same table, 17 meetings, only 5 minutes break in between, no time for lunch. Believe me, you are tired, but I had a very funny experience this year at the airport on the way back to Copenhagen. My 2 colleagues, Mads and Carl, who are like 23, 29, they were both exhausted. Oh, we're so tired. How do you manage? I said, okay, good. Is that only because I'm getting older? I think because it is, if you're giving that much of yourself, you're well prepared. You want the person you're addressing, meeting, to have an impression that you actually want to see them. You are well prepared. And of course, you spend so much energy. So you get rather exhausted, of course, after. And again, there are a lot of side events, though. I don't do alcohol, and I go to bed before 12. Still having many hours, of course, it affects you. But the sad answer is, there is nothing that beats a good, well-prepared, whether you're a moderator like yourself or whether you are investor or founder. The better prepared you are, you can see the right. It's better to see 2 or 3 relevant investors than randomly just pinging out to anyone you see. Sometimes I'm also being contacted by obviously founders who don't know who we are, saying, "Oh, we are about to do our first fund. Could that be of interest?" I say, "We are a secondary fund. Do they even read our names? We don't do primary. We only do secondary." Of course, I still answer politely, but sometimes I think, how dumb can you be? Yeah, there are like maybe 200 VCs. Why don't you do your homework and find out which of them would be most relevant for me, like in any other situations?
That's a very good example. Sometimes just people not doing the homework and trying to go with the quantity versus quality without actually understanding a potential match. But still, 17 meetings per day. I think for the ones who don't know Peter well or haven't followed him yet on LinkedIn, where he's very active. So he is always the one who posts a picture from the conferences. The earliest the lounge opens, Peter is already there having his meetings, and I have no clue how are you handling this literally. So we've just heard one tip. So you're come really well prepared. So I do agree when you come prepared. So it does not take that much effort actually to figure out why we're here. You already know where are we heading to. So that really makes it easier. Second thing I heard, no alcohol. 100% hydration, water, no alcohol really helps to go through those events, stay fresh, keep your brain focused. But what else? And okay, sleep before midnight. These are your three basically pillars.
And then honestly, only take meetings you want to do. And of course, also sometimes I also always prioritize to take 1 or 2 very early startups. Last year it was a Norwegian and a Finnish very early stage company because I I've been following them on LinkedIn and I've seen them. I think what they did were cool. They were cool. And I said, okay, at an early stage, if I could share some experiences, that would be great. And they are usually super thankful that you just reach out and are happy to get you share some thoughts about what you do. And also for me, it's also about motivating them to take the next step, or ask them, give them maybe an introduction to, I don't know, Danske Bank or Carlsberg, whatever, to a big corporate, which is more or less impossible if you not are connected. So giving those early, you could say, pre-seed seed companies an opportunity, but it also is a good combination between, of course, searching for the more mature ones, which are the ones we are, of course, talking to in our fund. Also to make sure I understand what is happening when you talk about AI and cybertech and quantum computing. It was not until recently I started to believe I understand a bit about quantum, for instance, but everybody been talking about it for a long time. But I was lucky to meet a super smart engineer who actually explained to me what that really was. So I'm very curious by nature, and I think and at the same time, some of the gift or the challenge you have can both be the biggest pluses you have in the book. It can also be the biggest challenges. One of my challenges and advantages are the fact that I'm very energetic and I don't have a stop button. I keep on doing until I reach what I want to do. And the good part is I get things done. The bad part is sometimes I get it done, but I forget that you started at 7 o'clock. Now it's 9 p.m. Shouldn't you quit? But I try to improve. And that is also why, like today, I'm working from my house in the countryside, because then I bring my dog and I can go to the water in the morning. And in 2 hours, I can take a walk in the forest. So I sure relax a bit and get my mind on something else. But, I'm doing this totally voluntarily because I'm doing it because I love to do it. And I think it makes me happy, basically.
That is so great to hear. So, and you mentioned you're doing what you really love doing. How did you find something you love in life? We always struggle now, especially nowadays with younger generation. We really struggle to find our calling, the life task where do you really want to put energy?
It's also a very good question, because for very, very many years, I worked, as I said, as a banker, as an asset advisor. Well, and that was, I left home at 6:30 and came back at 6:07. My wife took care of the children. I was working many, many hours for many years. And then I found out that when I started as an angel investor, it was not, I didn't put in the hours because I had to, but because I couldn't help not to. Because when you start, instead of building companies, which are then in the asset management industry earlier, I started to invest my own money into, you could say, of course, younger founders. And I learned the hard way that it is super, super difficult. It's also high risk, but I did around 35 early stage deals, anything from 25,000 euros up to some hundred thousands. But I also learned that doing it alone was very difficult. So I started doing it with some friends from DANBAN, the Danish Business Angel Association, and especially one guy called Sten. Him and I, we did like 15 or 16 deals in 2.5 years together. And we are
wild numbers.
But we have already done, I've already done like 8 or 9 exits and have another 2 or 3 pending. Of course, I also have 15 that are dead. But in total, I've been lucky, learning a lot from doing those angel investments. By doing those, I learned a lot of smart founders, and many of those people I did angel investments are also investors in our secondary fund, because you talked in the beginning that I do secondary. Secondary is basically old shares you buy, existing shares you buy, typically from founders or someone in a company who, for various reasons, might like some liquidity in a successful company, because as it goes, startups are unlisted shares. You cannot go to the stock exchange or the bank and say, I have this company, it's worth 50 million euros, I have 10%, please give me 5 million in a loan. It doesn't work like that. So therefore, somebody goes to a fund like ours and make a deal, so we buy some of those shares from them, basically. So that is basically the nature of that game.
Yeah, before we get into the secondaries, I still want to touch base. No, it's great that you're really like flowing with all this information, but since you invested, you mentioned 35 already companies, right?
Yes, personally I invested like in 35, and then, but I met also, I think, more than 1,000 the 3 years I did that. So I saw a lot. Some people said, among other angels, oh, Peter, investing to the left, to the right. No, I was mitigating my risk, because basically I hate taking risk. As a former asset manager, I've been living my whole life helping very wealthy people to keep their wealth by being, risk averse, having some of their money in real estate, others in fixed income, others in equity and all. So I was basically doing the same. And especially since I was so lucky, in April 2017, I was invited to Estonia with Startup Wise Guys. And I found that in those days, a startup in Denmark or Sweden might have a valuation at an early stage of 2 or 3 million euros, asking to raise 400K. In Tallinn, they were maybe had a valuation of 1 or 1.2 million euro, and valuation was just very, very much more attractive, basically, in the Baltics at that time. I know now the spread it has narrowed a lot, obviously due to the many successes. But what I've seen also, like in the Baltics, is that Lithuania is picking up randomly, narrowing the gap to Estonia a lot. Some of the best investment we have done in our fund is actually, they're both Lithuanian. Kilo Elf and TransferGo are both extremely well-led company by awesome Lithuanian founders. And I think there's still a lot of potential in many of the upcoming Lithuanian companies. But that was another. And sorry for not staying right.
Great.
You dragged me back to the right tracks, I hope.
No, it's great. Yeah, I can see Lithuania, where I'm originally from. It's really, really picking up, and it's great to see so much energy. And my question would be actually still about so many investments you've done and so many founders you've spoken to. What are the common traits do you see in the most successful founders, and how do you make your actually decision?
I would say in the beginning, I sort of sometimes made the rookie mistake saying when I came home to my wife, said, oh, I met these founders. They really liked me, and it was so good chemistry. And she looked at me and said, Peter, they want your money. Obviously, she was very, very right. At that time in the beginning, I was more like, the more positive they were, the more eager I was, But I would say another idea is also, you never have to invest in the product. It is a people business, period. So I learned that for me, what worked best is a founder. I started with 2 founders, never one a sole founder. I'm not very good at that. I had bad experiences, the one. But 2 founders, maybe 3, but preferably 2. And especially if the one is very technical and the other one is very commercial or business oriented, you say that is the best. And also, I would say the most successful founders with whom I've invested have been maybe in the mid-late 30s, sometimes even beginning of their 40s. More experienced one, though I have also done investment in even younger than 20 or beginning of 20s, and most of them are simply too unsecure. And of course, you cannot expect they have the experience, but it has been some of the. But as a character for the founders you ask for, I would say they need to have the right balance between being self-confident, but also at the same time being coachable. And that's a very, very thin line, because on the one side, as investor, you want them to execute and do what's best. On the other side, if they don't take any advice, you can make sure they will fail. I just had 2 calls earlier this morning with 2 of the companies with whom I invested like 8 or 9 years ago, and they're both doing very well on having 4 or 5 million euros revenue, doing great. And I think there's a good chance they might be exited in a couple of years. And but having said that, then I will also have the ownership for like 10 years, which is why also I don't do early investments anymore. Though I'm only 62, I would be sad to leave for my adult children and my wife if she lives longer than me, which would most likely be the case since she's 7 years younger than I am. I would be sad to leave a portfolio of 20 companies not being sold, because it can take ages. So I'm having still some quality companies left, and then spend all my time at Nordic Secondary Fund, where we invest in more mature companies. When we invest, the companies are typically like 7 or 8 years old. And so we invest at a much later stage, where hopefully the risk is mostly when and how well will the exit be, rather than will they live or not. Of course, there can be outliers going to the wrong side. But there will of course be less losses than there will be in the very early stage. Big companies are typically well funded. They are also, most of them, having high revenues and so forth. So the risk will hopefully more be like, when will there be a buyer of this company? Will it be listed on the stock exchange? Will there be a part of an M&A acquisition, whatever? So, or will we as a secondary deal, which we also have tried sometimes, but that was sort of. But yes, 35 companies private are many, but I gained a lot of learning, and also saying in our fund we have also invested in more than 30 companies so far, mainly in the Nordic Baltic. And then latest also one German company called Wingcopter.
And you had like 5 exits with Nordic Secondary Fund, no?
Yes, we have. In the first fund, we did 4 exits in the first 18 months. And in the second fund, we are almost fully invested now. We have 1 exit, and we have also a number of companies where the outlook for exits looks good, but you also get pretty humble when you see the markets has gone like they've done in the past years. And obviously, we started investing in the first fund at the end of 2019, December 3rd. And obviously that was when the market was going very much uphill. After the drop, 21, we started the second fund. So actually the second fund started at a more attractive level, price-wise, you could say, which is also why we are looking at our second fund is currently performing very, very good, because we were being in a situation where prices were more attractive for a long-term investor. The first fund is still positive numbers and things are good, but they're even better in the second fund. And I believe when we will hopefully begin our fundraising Q1 this quarter for the third fund, I still believe that opportunities are super interesting, because the current IPO market in Europe is not very attractive, and which means that there are a number of very good quality companies who have been postponed in their exit strategies, who might be interested in doing secondary deals now for maybe 2, 3, 4, 5 million euros, and then postpone their exit until either IPO activities are going back or multiples are being even better than they are now. So this is a perfect scenario for us. Also one of the reasons why we are seeing our deal flow is increasing in quality, and also not only we see the deal flow from Denmark, Finland, Sweden, Norway, but also Germany, Romania, Bulgaria. And personally, I believe that what we are experiencing currently in like Croatia, Bulgaria, Romania, it could be like what we saw in the Baltic 10 years ago. So the new Baltic could be the southern eastern part of Europe, and because they have so many similarities, like a very, very strong tech community, but still don't have a lot of foreign VC interest. So there's a lack of capital, but there's a huge level of tech competences, and many of those entrepreneurial people, they have had 1, 2, 3, 5 years in London or in the US. Now they're going back to whether it's Cluj in Romania, Sofia in Bulgaria, and now they want to build something because they are going back and getting maybe family or living with closer to their friends. And now they want to scale the local communities. And I was honestly super impressed, both at Texylvania, includes last year in June, and also at Webit in Sofia in October, November. There were so many high quality companies. I was very impressed, to be honest.
That's so true. I've been looking into that region and talking to people, and I think interesting things are happening, and they're not going to stop here, and more capital is being actually also looking into that area. Talking about capital and secondaries, so how it benefits both investors and founders, actually, for the ones who are listening right now.
You could say there are, of course, there are different strategies. And second, our strategy is actually very simple, because simplicity is very easy both to remember and to explain. Basically, what we do in our fund is that we only buy secondaries in company post-Series A, meaning more mature companies, and we don't price the company ourselves. We basically look at what was the price at the last external funding round if the company had a Series A or B, and to make it the number is easy mathematically. If you say the company had raised around at $100 million in valuation, we simply start by deducting 25% due to illiquidity and credit risk, saying, okay, if the company last took in capital at 100 million and they had delivered more or less to the KPIs listed for the investor to join that round, whether that round was half a year, 1 year, 2 years back, we will start by deducting the 25%. And then depending on how they have delivered on the economic goals on that, we will either ask for a bigger discount, or we can accept a discount less. We never do less than 10%. Sometimes we have done deal with 50%, which we did in the beginning of 23, 24, because some of the valuation from 21, 20, and 2020, they were obviously far too high compared to the levels we are seeing today. And founders know that. And there are like a couple of things in life that are quite certain, which is that good company always gets funding. Of course, you can discuss the terms and the condition and where they have this money, but good company, and also say secondaries in good companies, there are always a buyer. The thing is that what was a surprise to me back in 2017 was that there were no funds who did secondaries only. It was pretty normal for a venture fund, if they came in doing an A round for a company, say, okay, we come with 5 million euros, valuation is 30 million, but we want to clean the cap table, take out your friends, fools, and family, and they will have to sell their shares with discount of 20, 30, 40%, whatever. That was pretty normal. But between the rounds, the founders was pretty more stuck and had to wait until there might be a next round, and then they could politely ask with, taking off the hat and asking, could there be a bid for us? Because there were also like this cultural thing in the Nordic Baltics. Founders were sometimes afraid, what if I ask to have 500K, or do they think I'm not serious, or do they think I'm not in it any longer? But that's wrong. Only the dumbest investors don't understand the importance of having founders who, beside mental and physical health, also have financial stability in their life. Meaning, if they want to raise a family while they're growing the business, they can actually afford having a child or two. They can afford that their husband can maybe work a bit less, or their wife, whatever sex they are partnering with. But they can actually have a family. They can have a life. They can travel if they are single. They can do things with their friends. I think that is super important, because you spend so much energy. And the thesis that for the first 10 years you have to work to your more or less halfway dead, I think so old school and so less productive. I think it's much better to have people who are, of course, they are executing on what they have promised the investors, but it's also important that they are taking a walk in the mountains or going for a hike on bike or whatever they do. So they have the mental capacity to act like a human being, because they will both be better bosses. It will also be good for the business that they are, so, and that you cannot do if you've been working at a very, very low salary compared to your peers if you were join the corporate. Sometime in life, of course, when you're 25, it doesn't mean a lot, but many, as I said, of those founders are founders in their late 30s or 40s, whatever, and they have friends and they have a network where they would like to be. Maybe they don't need the most expensive apartment in the city, but they would like maybe to have just rent a nice apartment, or take their family for traveling, or help their sister or brothers or parents, whatever, do things. like any other decent people would like to do, and at least also do something for themselves while struggling, because it is a very hard work building a business. In the same way as it is when you want to be a moderator or podcast host, because you're not the only one. There are thousands who want to be it, and so some are trying, but very few can be as successful as you have been, actually make it to a living. So therefore, you know exactly that it takes a lot more than it looks. And the same goes as an investor. There are so many things tempting you. Oh, that could be nice, but the thing is, you can do is trying to find the right one. So, and again, sorry for giving a very long answer.
No, it's a very good answer. You give a very great overview, and it's nice to listen to your thoughts and flow. But I totally agree with you about this whole more healthier approach towards this whole industry and ecosystem. We've been having such a big hustle, no rest culture that we can clearly see the consequences on the mental health, on the physical bodies of people who maybe pushed a bit too hard and didn't know when to really make this small pause. So it's great to see more and more funds overall talking about that and providing more healthy environments for growing the companies, because at the end of the day, we need the sharp focus, right? And the help to do that and to move the needle. Talking about this whole current industry and landscape, I've been attending quite a few conversations with LPs and also some VCs. They were mentioning that more and more LPs kind of holding back from investing into the other funds because of slower exits, and the landscape, it's a bit changing. How do you see this whole investment landscape right now evolving? Maybe you see some kind of future trends. Where are we heading to?
One thing for sure is you can see that the number of funds has decreased significantly. Yeah. I think around 30 or 40% less funds are raising capital. But you could also say there has always been a huge increase over the last 5-10 years. So maybe it's more natural. I'd also say that I'm happy that we do secondaries, because if I was a founder and I should find out which of all those funds, if you go to, like, when you go to TechShield, maybe 5 years ago, there would maybe 30 or 40 VCs. Now there will be at least 100, maybe even 150. How, as a founder, do you find the right one? And how do they profile themselves as being the right investor for a certain... I'm actually still surprised that there are so few secondary funds, because we know there's one in Estonia, and then we know there are some funds in Germany, but they are like blended funds. But we have hardly any competitors. We haven't had any competitors in the last 5 years who, like us, did tickets from 3 to 9 million. We had that space totally for ourselves, and I believe the reason for this is that it is much more complex, and there is also both from the deal flow, but also especially on the waterfall analysis. Some of those companies, if they've had like 5 or 10 capital rounds, understanding the value of each round and all these things, it's pretty tricky, and therefore the access barrier of entering is more difficult in a secondary fund than it would be in a traditional venture fund, basically. And I think that is one of the reasons. But the outlook, I still believe that another observation is that some of the local very good funds have actually managed to raise new funds in the last 6 months. For instance, like Maki in Finland did the 100 million, Practica Capital Lithuania did. But again, I know also Practica, I think Donatas and his team, it took maybe, I don't know, a year and a half raising that. Though they have extremely good results, it shows how difficult it is. Even in a good fund like them, it takes maybe a year and a half, 2 years to reach the level you want. So I'm also very humbled, because we were lucky to do our last fund in only 4 months. Now when we start fundraising, Frank and I, my partner, we have said to each other, okay, realistically, we will probably have to spend around a year before we reach the target we want. We could be lucky, it could be faster, it could be more, but we are fully aware that it will not be, also because we have most of the investors we had in our first fund are also investors in our second fund. And though we have delivered 5 exit, many of those, you would say, angel investors and private investors, they already have a nice exposure. So we believe that we will also be seeing more family offices, also from abroad the Nordics, but also from institutional investors. We are also experiencing now that they are more eager to look at us at a more mature level, having, of course, data and traction, not only for one, but from 2 funds. And But time will show, and I still believe if your performance is okay, it is, of course, it's doable, but there's no doubt that the money to be picked up, there are fewer of them, and there are more people trying to get them, which, of course, also is one of the reasons why fewer has managed to raise. Many have failed to raise any funds, and some of them have raised less than they expected. But, of course, there are exceptions, like I mentioned with Maki and Practical, who did well.
So, Peter, since you're right now an expert of raising for funds and opening up soon potentially a new fund, so what would you do different than previous times?
That's a very good question. For instance, I will be attending this Super Return International venue we spoke about earlier in Berlin in June, where a lot of institutional investors are coming, because most realistically we will be also in process with some institutional investors. But basically we will start by doing what we used to do, which is talk to our many friends and partners in the Business Angel Association, the Nordic. We are a proud member and partner in a number of them: Danban in Denmark, Norban in Finland, FIBA in Sweden, Litban, Latban, Esban in the Baltics. So, and within those networks, there are a lot of people who think secondaries are interesting, and because they usually get access to the companies very early stage at the same time as the pre and pre-seed venture center. But when the companies are more mature, like Wingcopter in Germany we invested, or Swabi in Finland, when they are that big, the investors are no longer like welcome to join the party. So by having those as our LPs, we will do that again. But what will be different is that we will do our very best to attract more family offices from outside the Nordic Baltic region, but also within the Nordic, our investor base is still 90% from Denmark. Luckily, a number of family offices in Norway and Sweden and the Baltic have asked to talk to us. So I'll be in Norway in the beginning of February for 2 days, visiting like 5 or 6 of those family offices. So I'm, as usual, optimistic, but also trying to be modest in my expectations regarding the time, because usually I'm a time optimist, but I know it will probably take around a year to
But I do recall, right, when you were raising the first fund, right, you were expecting that to raise in 3 months or 4, and it took you 1 year and a half or 1 year?
13 or 14 months. That was a wake-up call, but, and that was only because I had the experience from doing asset management companies.
Yeah.
I was lucky to be a part of a group where we raised 700 million euros in less than 2 years. So I thought, piece of cake, it was not. And that is also why I had the biggest respect when, like, I remember when our friends from First Pick, Jonah and Andrea and Dima, they raised their first fund of, I think, 20 million something in Lithuania. Big applause, because it is very, very tough to raise a first fund, because you don't have any, if you could say, data or performance you can lean on. You only have people trust that you will work hard to deliver, basically. So, but they have done that as well, and there are some very good upcoming funds, and we are working with many of these funds, because sometimes we actually also buy secondary from funds who are maturing. So, and we are not like competitors, because they are at a much more early stage, and they are providing capital for the company to grow. Where for us, we can help cleaning up cap tables, we can provide liquidity between the rounds. So we are working excellent with a number of a lot of funds, actually, both in the Baltics and in the other and the Nordic countries. So that is a privilege for us to be in.
So great to hear that you're collaborative in the scene, and literally wish good for the founders and everyone who is involved into this, also investors. My question is, so what's the secret sauce is behind your success that makes you go through all those ups and downs, challenges, wake up in the morning, have that energy?
I think basically for us as a team, I need to say I'm privileged by having a very good partner and some excellent people on our team within the N2F. But if you ask me on a personal level of being humble and having done an OPA, I think I'm extremely persistent, borderline to insistent. When I'm targeting something, I don't quit until I get where I want to go, basically. And that is, of course, I'm happy to have that as a skill, but it's also sometimes a skill that has brought me close to a stress factor, which is not healthy. So I have had like 2 pauses due to too much workload, but only initiated by myself. But being extremely, you could say, hardworking, well prepared, but I do it because I like it. I think no matter what you do in life, whether you want to be the best hairdresser or rocket science, as long as you do what you really like, you will have fun. And if you keep on practicing what you're doing, you will also be good at it sometimes. So when people say, oh, you're lucky, you have so many customers, oh, you're lucky. Yes, it's Johnny. The harder I work, the more luck I get. I'm sure it's also more or less the same. The better you perform as a moderator, the more likely it is that you get rebooks or bigger tasks for next other here. It's basically the same. If you deliver more than people expect and do it continue, you get successful. If you under-deliver or don't deliver, you get zero or you get fucked, basically. So that's just my honest answer.
Very, very good answer. And consistency, I guess, right? Just going for it. All right, so we're getting closer to the end, and I do have this tradition in the podcast to leave the listeners with some kind of thought to ponder. What would be your question to ponder on for the audience who are right now with us?
Yes. My question would be, instead of when you meet new people, instead of thinking, how can I benefit from this meeting thing? Start by saying, what can I do for you? How can I help you? Don't underestimate how much you gain by being friendly. You're also self very outgoing, very positive. But people, it's a very good exercise. Try to the next conference you go. When you meet people, of course, you present yourself short, but then ask, just open-minded, how can I help you? You get surprised to see the reactions. Very few actually have any question, but the ones who have, they get so happy for your asking that maybe they even forget afterwards what they really ask you to help for. But the people are like in private relation. If you show them that sincere concern, of course they like. Everybody like being taken serious, and everybody like to get a good treat. And being kind is the easiest way. It's both very, very good karma, and as I said a number of times, it's also extremely good for your business and your reputation, because whether you are trying to be a good investor or presenter or whatever you are only as good as the last performance or the last gig you did. There are no people don't accept anything but your best, and also from yourself, because if you don't feel that you bring quality to a conversation, then you shouldn't do it. Then you should do something you really like. That was not. I think I managed to put in 3 or 4 things. I hope it worked, but otherwise you can click and cut and afterwards and make it sound maybe a bit more to the spot.
It does. Thank you, Peter, so much, ladies and gentlemen. So we had today with us Peter Sandberg from Nordic Secondary Fund, and follow his journey on LinkedIn. He's very active there. Check out their website, which is very informative about their portfolio, about the companies they invest into, and all the latest news, and also the whole team. And yeah, Peter, thank you so much for finding time and joining Perception Paradox. It was a pleasure.
Thank you, and thanks for having me. Thanks a lot. Cheers. Bye.